A warm welcome to you, my dear children, my dear students. The next chapter, chapter 2 of Unit 12, correction of accounting errors. Correction of accounting errors. Correction of accounting. We can say it in several different ways. Yeah. All right. Identification of accounting errors. We are starting today's chapter with this. Learning how to identify. Learning how to identify accounting errors. Yeah, accounting errors. You know already what accounting errors are. In the previous chapter, in the previous video, I explained to you crisp, clean and crisp, clean and clear, for you to understand what accounting errors are, how accounting errors occur, where accounting errors occur, where accounting errors occur. If you didn't watch that video, I advise you to go and watch that video and then come back and watch this, because you have to have the identification. In order to identify, for identification, you have to have the base knowledge of accounting errors, the basics about errors and how errors occur, where errors occur, where. Yeah, we took the bookkeeping process and we very clearly identified where errors occur. Errors may occur in the accounting process, in the bookkeeping process, in the books of accounts. Okay, so now we identify and correct them. Agreed? Simple as that. Transactions of a business are recorded according to the double entry principle. According to the double entry principle, we take from prime books of a business. We take from the prime books of a business. Okay, and the monthly or weekly addition totals from prime books we transfer to the ledger accounts. Double entry system. According to the double entry system. Okay, debit entry in one account and a credit entry in another account. Okay, debit, credit, double entry. Yeah, you remember. According to the double entry system principle. Accordingly, every debit entry should have a corresponding credit entry. Every amount which is debited should have an account which is credited. Every amount, every value which is in the debit side, which you put to the debit side, should have another account, and that value should go to the credit side of that account. That's what it says. We already learned about these things. You are very familiar, very clear with the double entry system and how it works. No? Did you say no? Okay, go and watch the videos. Double entry principle and the dual impact of transactions. It was done several units back by me, and the video is available. Okay, so double entry system, double entry principle. Every debit entry should have a corresponding credit entry. Okay, every debit entry should have a credit entry, which means when the total of debits are taken, it should be equal to the total of the credits. When the total of the debits are taken, it should be equal to the total of the credits. Should be equal. Yes or no? Yes. Yes, children, yes. There's no doubt, there's no debate about that. Okay? No doubts. Debit total must be equal to the credit total. Right? That happens in the trial balance. No? We take the debit balances from the ledgers, all the debit balances, list down in the debit column. we take the credit balances from the ledgers. The ledger accounts which has credit balances, we take all the credit balances, put the credit balances to the credit column of the trial balance, and debit balances are taken from ledger accounts, put the debit totals to the debit column, right, and take the addition of the debit column and credit column. Additions will be equal. Debit total will be equal to the credit total. Okay, that is called balancing the trial balance. Okay, the trial balance should be balanced. That we discussed. Yeah, all right. But this is the new thing. If both totals are not equal, if the trial balance is not balanced, that is an indication that errors have occurred, which means errors must be there. Simple things, no? Simple things, right? Yeah. In the accounting process. However, even if the totals agree, still there might be errors. That is the important thing. Yeah, this is it. This is it. This is the important thing. However, even if the totals agree, still there might be errors. Children, even if the trial balance is nicely balanced, it is balancing at one solid trial balance, clean and crisp, balanced at once. You can't say, wow, my trial balance balanced. That means all the accounting records are correct. All the debit entries are equal to the credit entries. My books of accounts I have prepared 100%. 100% accurate. You can't say that. Well, you can say, but it's wrong. You can say, wow, it's all correct and I'm a genius. You can say it, but it's wrong. Your ideal is wrong. Even though the trial balance balanced, you can't be sure that all your accounting records are correct. No errors, no mistakes are there. You can't be sure. There can be errors. All right. There might be errors. Okay. However, even the trial balance total agrees, still there might be errors. Hence, the agreement of credit and debit balances in the trial balance only confirms that similar values are debited and credited in the accounts. Well, that means, children, the if the trial balance balances, that means the agreement of credit and debit balances in the trial balance only confirms that, it only says that similar values of debits have been recorded as credits. Similar values of debits have been recorded as credits, which means debited values are credited. That's it. So, the arithmetical accuracy only is shown by the trial balance if it balances. If it balances, if it balances, that confirms only the arithmetical accuracy, which means that all the debits are equal to credits. Okay. It doesn't mean that all your accounts and prime books and all the transactions are recorded correctly. 100% correct. No. Remember, important point, right? So, even if the trial balance balances, still there might be errors. Shall we? Errors can be categorized into two. There are two types of errors. There are two types of errors. Right? There can be two categories of errors. First category, First category. Errors that do not affect the agreement of trial balance, which means errors that do not affect the trial balance, balancing of trial balance. These errors do not affect, which means even though these errors are there, trial balance is balancing. Yeah, these are the most serious errors. You can't even trace, you don't even know. Trial balance is balancing. You say, wow, my trial balance balanced. I'm a genius. I balanced my trial balance at once. And I will say, really? Your trial balance balanced? Which means you're counting all your accounts and all your prime books and everything is 100% correct. Huh? Is that what you're saying? Very nice. Okay. That's a joke. You can't say that your accounting records and books of accounts and everything is 100% correct, because these errors are there. Then we have the second type of errors that affect the agreement of trial balance. Okay. These errors affect the agreement of trial balance, which means the trial balance actually doesn't balance. Then it's easy to identify, it's not balancing the trial balance. That means there must be errors. Yeah, that is the second type. Okay, so these two types we must correct. Correcting of these errors are done. We do the correcting of these errors in the general journal. Yeah, we do it in the general journal. Let's learn how to correct these errors. Okay, first of all, just take a look at this. Accounting errors. Accounting errors can be divided into two. Right? First, errors that do not affect Okay. Second, errors that affect Can you see? Can you see it now? Errors that do not affect and errors that affect. What? Errors that do not affect what? Errors that affect what? The trial balance. The trial balance. Trial balance. Here also trial balance. Alright. Errors that do not affect the trial balance. Then we have errors that affect the trial balance. Okay. Accounting errors are divided into these two main groups. Right. Errors that do not affect. First we are taking this. Errors that do not affect the agreement of trial balance. Trial balance. That means the trial balance balances. no problem in the trial balance. Right, let's see. Some errors that occur in the accounting process might not affect the agreement of the trial balance. Might not affect the agreement of the trial balance. Therefore, even if such errors had occurred, total of the debit and credit columns would be equal. That's what they are saying. Even if such errors had occurred, total of the debit column would be equal to the total of the credit column. Okay, that's what they're saying. That's what it means. These errors are there, but trial balance is balancing. Trial balance is balancing. That means like it balances. Okay, debit column total is equal to credit column total. It's balancing. These errors are also known as errors that are not revealed by the trial balance. That is another name for these errors. Errors that are not revealed by the trial balance. Errors that are not revealed by the trial balance. Okay. Yeah. First one. Now we are going to talk about the errors that do not affect the trial balance or errors which are not revealed by the trial balance. First one. Children, we are going to talk about one by one. Okay. We are going to talk about these errors one by one. This is the first one. A complete omission. Complete omission of a transaction. Complete omission. Which means completely the transaction is not there. Not there. Not there. Not in the books. The transaction is gone, forgotten, neglected. Okay. Somebody is responsible for this. Who is responsible? Well, we don't know. We don't know who's responsible, but somebody is responsible. Most of the time, these sales executives, they go with the ties and with their full sleeve shirts and very smart attire. The salesmen, very smart people, marketeers, and they go for distributions, right? And they have the bills. Wherever they go, they have the bills, the bill book. We call them source documents. Yeah, that is the proper word. Or these days, these sales executives, they have like a ticket machine, a digital machine with a screen or a tab. Sometimes they have a tab. They keep a tab. Okay, digital, modern technology they are using now. Bill books are not used sometimes. They keep a machine like a ticketing machine. In buses, in public buses, the conductors have ticketing machines. Ticket machine, right? They enter the amount and the sound comes with the ticket. Yeah, just like that. Yeah, just like that. There's a machine in the hands of sales executive, or a tab. Okay, and they enter the transaction in the tab with a pen. They enter the transaction with the touch screen. They enter the transaction. How many boxes of biscuits? 10. How many boxes of tissue papers? 100. What else did I sell to this boutique, to this shop? 500 boxes of 500 boxes of tea bags, and they enter the sale into that tab they have. Okay, and that tab prints the source document, or there's a machine, the ticketing machine, something like that, prints the source document. That source document can be misplaced. Yeah. So how much of goods were sold to this shop before the lorry is taken out from that, and before they go to the other shop? You know that they are in distribution, sales executives, these salesmen, before they take off, that source document must be added to his file, to the salesman's file, the source document file. But you know, it could get blown off. The source document can get blown off. Or the salesman might forget it somewhere in the shop, or the salesman might drop it. You know, these things happen, right? These things happen, children. These things happen often, very often. So that transaction is omitted. Complete omission. Okay, completely gone. Transaction is not recorded in any way. If a particular transaction is not recorded in the prime entry book, such a transaction would not be entered in the ledger accounts as well. These errors are known as errors of omission. Double entry of the omitted transaction should be entered in the relevant ledger accounts. It's simple to correct these errors, right? It's simple. Yeah. An example is given here. Let's take that example. An invoice of credit purchase 50,000 has been completely omitted from the accounting books. Invoice of credit purchase 50,000. Okay. Invoice of credit purchase, which means our business. We have purchased goods. We have purchased. Okay. We have purchased goods like stacks and stacks and boxes, more and more, right? In our shop, we have brought in, we have purchased for the shop. But that invoice, the purchase invoice, is misplaced. Mudalali has dropped it, or somebody has taken it, or the dog has eaten it. You know, dogs eat papers sometimes, yeah. Anything could happen, right? Okay, so anyhow, the purchase invoice has not been recorded, it's completely omitted. Now the error is given to us. What should we do? We are going to correct it. How to correct it? We are going to correct it in the general journal. General journal. General journal. Why general journal? Because, children, the general journal is the journal which is used to record all the other transactions which cannot be entered in the specialized journals. I told you that the general journal is like the garbage bin of bookkeeping. Told you. Oh, did I tell you? Yeah, I told you. Yeah, I told you. The general journal is like the garbage bin of bookkeeping. General journal. Yeah. Date, details, debit, credit. The general journal. Alright. We have to record this error, not the error, we have to record the rectifying entry. What is the meaning of rectifying? Is it like the no, it's not anything that you think. It's the correcting entry for this wrong, for this mistake which has happened. Correcting entry. Remember, children, entering or doing a correction means recording the correct double entry. It's just a double entry. Okay? It's just a double entry. Because it's an omission, we just have to record the double entry for the transaction. This is the transaction. Credit purchase of 50,000. Easy. We take the general journal. We must record these things somewhere. That is why we take the general journal, because we can't use other journals like the sales journal, purchases journal, the petty cash journal, or the cash book, or the bank book. We can't use those. Those are specialized journals. That's why we use this one, the garbage bin. Yeah, right. So this general journal is used. Okay. Invoice of credit purchase 50,000. Credit purchase. We have purchase goods, right? We have purchase goods, more and more goods. Purchases means, purchasing means purchase account should get debited, should be debited. But since this is a credit purchase, cash is not paid, then cash is not involved. It's a credit purchase. So purchases account obviously should be debited. Which account should be credited? Creditors. Creditors account should be credited. That is the correct double entry. We are just entering it in the general journal. Invoice of credit purchase 50,000. First, the debit entry must be entered. Purchases account is the debit account, 50,000. And there's a tradition of putting DR for debit entries, but for credit entries you don't put the DR, you don't put the CR. It's like for purchases account or for any other account, if the account is debited, that entry should be on top. Debit entry should be on top. The first entry should be the debit entry, and you just write debit. A small DR should be written. It's a tradition, okay? But for the credit entry, now which account is credit? To which account should you put to the purchases account debit, and put to the cash account credit? No. Creditors account credit, because it's a credit purchase. So for the credit entry, you write creditors account in the credit column. You put 50,000. For the credit entry, you leave a small space. Like that. You leave a small space. You know, these are traditions. Very small space in the beginning. You leave a little bit, and you start the credit entry. The same amount which should be debited, which is debited, should be credited. That is the important thing. Same amount which is debited should be credited. Okay, account names are written like this. Yeah, and finally, when you correct an error, after every entry like this, after writing the correcting error, after writing the rectifying entry, you must put brackets in the description column, in the details column. All right. And you must write one sentence about this error which you corrected. One sentence. Traditions, the way that it's done, this is the way. Okay. You must write one sentence about the error which is corrected. So what is the error which you corrected? You must write like this: corrected the error of omitting credit purchase. Corrected the error of omitting credit purchase of 50,000. If you want, you can put the amount also of 50,000. One sentence to describe the error. Children, this is called the narration. This is called, let me turn around, this is called the narration. What is it called? No, not the narration. It's called the narration. Narration. Okay. Narration. Can you identify? Can you read my cursive letters, cursive writing? It's called the narration. Okay. Narration. Narration. You must write the narration. Yeah, that's it. Your error is corrected. Simple as that. Let's go and see. This is what the book has offered you. The book is showing the correction entry or the rectifying entry like this. Date, voucher number, description, ledger folio, debit credit. I just drew the basic format with only the necessary columns: date, description, debit credit. Purchase account debit 50,000, creditors account credit 50,000. Can you see? Can you see? Purchasers account debit, creditors account credit 50,000. Yeah. Narration: correction of error of omission of purchase invoice 50,000. Did we do it right? Purchasers account debit 50,000, creditors account credit 50,000. Corrected the error of omitting credit purchase of 50,000. Same thing. Same thing. Okay. Purchasers account debit, creditors account credit. Yeah. Creditors account credit. Narration: correction of error of omission of purchase invoice. I wrote the same thing in a slightly different manner. Correcting the error of omitting credit purchase of 50,000. Done. Okay, bye bye first error. It's done. Yeah, that is how you correct an error of omission. When a transaction is omitted, and it is given to you like this, when it is given to you, you just have to draw the general journal and record the correct double entry to record that omitted transaction. So this is error number 1. We corrected one error. In this manner, and we wrote a narration in this manner, and it's done. Let's go and find out what other errors are there. What other errors are there? Shall we? Okay. Second type of error. Second type. Recording incorrect value of a transaction in the prime entry books. Now recording an incorrect value. Not completely forgetting a transaction, not completely omitting a transaction, but recording in the books incorrect value, a wrong value, entering a wrong value in the books. Okay, and we don't know that the value is wrong. We have kept the books and we are going on with our business nicely, happily. We think that there's no problem, but there is a problem. What is the problem? A transaction is entered, but the value of the transaction is wrong. There can be many such errors in one day. Okay, let's see. This refers to recording lesser or higher than the correct value of the transaction, where we can record the value lesser or higher. You know, if the bookkeeper is so tired and so, you know, mentally down, he's having problems at home, and you know, 6 kids, and wife is always nagging wife. These are practical real life things, scenes, scenarios that we have seen. And the bookkeeper is these days, he's out of his mind. He comes to work very tired, and he goes with the recording of transactions. For 45,000 he enters 54,000. For 80,000 he enters 30,000. And we have to, you know, get him on track. We can't go and scold him saying, Piyadas, Mr. Piyasiri, මේ විදියට transaction record, මේ විදියට books ටික, මේ පොත් ටික හදලා මගේ business එක බාන් කළොත්, you can't scold, you know, like that. You have to understand the situation. But errors should be traced. Okay, errors should be traced. That means noted and corrected. Then recording lesser or higher than the correct value of a transaction in the books of accounts, in the prime entry books. Both the values entered as debit and credit are wrong. Both values are wrong. However, there is no problem for the trial balance. For the trial balance, no problem. Why? Because both the debit and credit, both values are the same. So debit value and credit value both are the same. So the trial balance balances. But these values are wrong. These values are wrong. Example, if the transaction should be entered, if the transaction which should be entered is let's say if the transaction which should be entered is is something like a check received from debtor, a check received from a debtor, the check value is 64,000. Okay, a check received from a debtor. That is the transaction which should be recorded. The bookkeeper is recording that transaction, and the bookkeeper is not really properly operating. The bookkeeper is not really, in his good mind. He's out of his mind these days. He's having problems, and he's having things. He's having let's say stress. So he sees the transaction, a check of 64,000 received from a debtor. Got it? This is the transaction. He sees this and he looks at the transaction. He looks at the value 64,000. And he thinks, okay, 64,000, we received the check now. This check is 64,000. We received from whom? Received from a debtor. Debtor's name is who gave this check to us? That guy. Who is that? Who was that? Sirisena. Sirisena gave the check now. Let's record it. Likewise, he goes to record in the relevant accounts, and the bank account is debited, debtor's account is credited. But instead of 64, he puts 46. Debtor's account also he puts 46. Out of stress. He's rushing to go home. At the really, very, very last moment, he gets to record this. He's arranging the books, and he has to record this received check, and he records 46 instead of 64. Wrong value, isn't it? Yeah, wrong value. This is the wrong value. But children, debited value is also 46, credited value is also 46. So debit total and credit total, there is, for the debit total and credit total, there is no problem. The totals balance. The trial balance balances, because the same amount is debited and same amount is credited. Amount is wrong. Okay. See, these errors are called entering incorrect value in the prime entry books and the ledger accounts also. Okay. However, there is no impact, but there is no effect on the agreement of the trial balance, because both values which are debited and which is credited are the same. Value is wrong. That is another problem. But debit total and credit total will get balanced. Okay, it will get balanced. So this is another error which affect the trial balance. which affect the trial balance. No, it doesn't affect the trial balance. This is another error which doesn't affect the trial balance. Okay, let's go and take an example. A credit sale invoice 20,000 has been recorded as 2,000. Okay, 1 0 less. There should be another 0 here, but the bookkeeper has forgotten, or he has not recorded the correct value. Credit sale invoice, it's 20,000. Okay, it's a credit sales. There you go. Credit sale, which means we are selling goods to our customers, selling goods, but we are not taking cash, so cash is not involved. Goods go out as sales account credit, sales account credit, asset decrease credit, sales account credit. Which account should be debited? Which account should be debited? No, we didn't get cash, so cash is not the account. Which account should be debited? Debtors account should be debited. Debtors account should be debited. Sales account should be credited. Okay, that is the double entry. But the transaction is recorded actually. Recorded is recorded as 2,000. Yeah? Yeah. Then sales journal is entered with rupees how much? 18,000 less. The sales journal is recorded instead of 20,000 only 2,000. That means 18,000 less. 18,000 less. Yeah. If 18,000 is less in the sales journal, that means, children, when the entry is taken from the sales journal to the ledger, when the transaction is posted to the ledger, the debit entry also 18,000 less, credit entry also 18,000 less. Okay, this transaction went to the debit side of debtors account, credit side of sales account. That is the double entry. Sales debtors account, debit. Okay, debtors account debit, sales account credit, but both accounts are 18,000 less. It's like this. This transaction has gone to the two T accounts. What T accounts? Debtors account and sales account. Right? Debtors account debit, sales account credit. Debtors account debit, sales account credit. Okay, but 18,000 less, because it should be 20,000. Here also 18,000 less. Here also 18,000 less. How much? 18,000 less. 18,000 less. This side also in the sales account 18,000 less. Okay. So what you should do? You should enter that the remaining amount. That's it. You debit 18,000 to the debtors account and credit 18,000 to the sales account. That is the double entry. See, the double entry is done. See the double entry? Debtors account debit 18,000. Sales account credit 18,000. That is the double entry. That's what. And you write the narration. Write the narration. This is the narration. Okay. What is the narration? Correction of understating the sales and debtors account by 18,000. Understating. Understating means mentioning a lesser value or aduwen dano. Aduwen dano කියලා කියන්නේ. That is understating. මෙතන අඩු වෙන්නේ නැහැ 18,000 lesser. So you write the narration likewise. Correcting the error of understating sales account and debtors account by 18,000. So you enter 18,000 to sales account and debtors account. You don't have to do the ledgers, children. You don't have to do the ledgers. You don't have to draw the ledgers and enter to correct the error. You just draw ledger accounts to figure out what to do. Okay, if you can draw small ledgers, you know, chuti ledger accounts like this, if you can draw, it will be clear to you. Then you do what is necessary in the general journal. That is writing the necessary double entry in the general journal. That is what you should do. That is what the examiners expect. The general journal double entry, correcting entry by you. Debtors account debit, sales account credit 18,000. Done. Okay. That's how you correct an error of putting incorrect value of a transaction in prime entry books. Putting an incorrect value of a transaction in prime entry books. That is the second error. I'm going to do another example for this. This example is a credit sale. The error is a credit sale invoice of 20,000 has been recorded as 2,000. Okay. I'll take another example. Likewise. Okay. Example. A check received from debtor, from a debtor, rupees 30,000 has been entered as 80,000 in the books. Now this is a error too. It's a critical error. Yeah, it's a critical error. The check is for 30,000. Alright, you get it? Do you get what I'm saying? Check is for 80,000, but it has been entered in the account as, I'm sorry, the check is for 30,000. Okay, see how errors occur? Yeah, the bookkeepers also face the same situation. When they are stressed out, when they are tired, they get numbers, you know, confused. They get confused with numbers. the check is for 30,000, check is for 30,000, but entered as 80,000. Okay, in the books, right. So the error has occurred in this manner. How the error has occurred? This is the first account. This is the first account. This is the second account. Okay, right, I'll turn around. There you go. How this transaction is entered, you have to tell me. How it should be entered. A check of 30,000 received from a debtor. Received from a debtor. Check received from a debtor. How? Tell me. We get cash, we get check, we get a check. So the check is sent to the bank and the bank balance increases. So asset increases. Debit. Bank debit. Okay. Debtor asset decreases. So debtor credit. What is the correct double entry? Bank debit, debtor credit. So I'm going to write bank and debtor. These are the two accounts. Bank account and debtor's account. Bank account and debtor's account. Bank debit, how much? Bank debit, how much? 30,000. Bank should be debit 30,000. Okay, but how much was entered? 80,000. 80,000 was entered. 80,000 debit. Right? Debtor's account 80,000 credit. That is the error. How much of a shortage is there? How much of a shortage? There's no shortage. There's an excess. 30,000 should be entered, no? But has been entered as 80,000. So in the bank account also, how much excess? How much excess is entered? How much excess? Difference between 30 and 80. 50,000 is excess. 50,000 is excess. In the debtor's account also, how much? 50,000 is excess. What to do now? What to do? We have to correct this. Correct. You correct it. Do it. Do it. Now you should have a good knowledge about good knowledge on the double entries. Okay. There is no doubt, without a good knowledge of double entry system, you can't correct errors. You will go wrong. So you do it. 50,000 is excess in the bank account debit side and in the debtor's account credit side. To remove this 50,000, to correct this error, what should you do? Yeah, I'm getting the answers. Yeah. Yes, correct. Correct. Very good. Very good. What should you do? First of all, debit side, if 50,000 is excess, if excess 50,000 is here, to remove that, what can you do? You can't cut the 80,000. You can't erase it. You can't erase. No. You can't do those things. But you have to remove this 50,000. What you do is put that 50,000 to the credit side. And when you balance this account, it will be nicely balanced with 30,000 remaining in the debit side. All right. When you balance, see, you will get 80,000, which is the higher value, and you will write it in the sum boxes. 80,000, the higher value, the greater value. And from this 80,000, you must subtract 50, and the balance remaining will be 30. When you subtract, the balance remaining will be 30. That is the correct value which should be in the account, 30. So we got 30, correct value we got. You don't have to do all these, things, okay? You just decide what to do to correct this error, having 50,000 excess in the debit side. For that, you credit 50,000, credit. Okay, so bank account credit 50,000, and what to do with the debtors account? In the debtors account, credit side is excess. To cut that off, you debit 50,000 to the debtors account. That is the double entry. 1, 2, double entry is done. So you write the double entry in the general journal. In the general journal, you write the double entry. How? It's simple. You draw a general journal, okay? Draw a general journal. And write the double entry. Debit, credit. Write the double entry. What is the double entry? Bank account, credit. Debtors account, debit. Debit entry should be written first. That's why you should take the debit entry first. So this is not the first. This is the first. Debit entry should be first. This is the first entry. This is the second entry. Debtors account. You write debtors account, debit, and you put 50,000 to the debit column. Then you take the credit entry. This one. Bank account credit. Babies, you got it. Error corrected. Debtors account, debit, you wrote it in the general journal. Bank account, credit side 50,000, so you wrote it in the general journal. Bank account, credit 50,000. Write the narration. Corrected the error of overstating. Overstating means putting in excess. Putting in excess. We call it overstating. That is the error. Corrected the error of overstating. Debtors account and bank account by 50,000. This is the narration. There you go. If you want, I'll make it smaller so you can see the entire screen. There you go. You have the example, a check received from a debtor, 30,000 has been entered as 80,000. So lesser amount but entered a very high amount in error. That is shown in the accounts. How this transaction is recorded, how was it recorded with the mistake. So bank account 80,000 is debited, bank account is debited with 80,000 and debtors account is credited with 80,000. And how the correction was done. 50,000 credited to bank and debited to debtors. Here you go. This is the way you correct the error and show it in the general journal. Right, children? We did 2 errors today. 2 errors. First, recording, not recording actually, completely omitting transactions from the books, complete omissions. And we corrected 1 error, 1 omission. Second, we took recording incorrect value in the books, and we took an example of recording incorrect values lesser. This example also, recording incorrect value lesser, and we corrected it. Next, we took recording incorrect value a higher value in accounts. So wrong because the value is higher than the correct value, and we corrected that. So with that, children, I end today's session. We did 2 errors. 2 errors which affect the agreement, affect the trial balance. No. 2 errors which do not affect the trial balance. All right. Yeah. I hope to see you soon, children. The next few errors which do not affect the trial balance, we have another error which is similar to the error that we discussed. It is recording of a lesser value. Yeah, lesser value. You can refer to the book. And then we have the third error, which is recording the same transaction twice. These are called duplication errors. This one we are going to discuss in the next chapter. So I'll see you soon. Do your work. The O-level exam, this 2021 O-level exam, is very close by, at our arm's length. So revise your lessons from grade 10 and get your accountings right. Get your accounting ability. Get it right. If you get your accounting section, accounting part right, that's going to earn you a lot of marks. You can put in a lot of marks under you, under your paper total marks, for your paper for the total marks. So earn your marks by getting your accountings right. Do your work. Don't stress out, right? I hope to see you soon. Thank you.